What is up, team? We have a huge week heading into the markets in terms of trading. I'm going to be talking about the news, what we're looking out for, the potential outcomes, the trade I took on Friday, and walking through that trade, as well as my trading plan for the week. And long awaited for, we have the silver, where is it? 1 ounce silver Canadian maple giveaway that we're doing right now. Thank you for all my subs that commented on my videos this last week. I tried to calculate your entries and put everyone in accurately. There was a lot of like spammy bots that were commenting to try to get in on the contest, so I removed all of them, which was like 80% of them. So you have really good odds. We're going to spin the wheel right now for the sub that is going to get the silver before we jump into the episode. We're just going to one and done spin this thing. I tried to put all your names in for how many entries you had into the contest. A bunch of you got your 6 in. There's a couple others who had a few entries in. So let's see what happens. This is actually insane. Strong Akil won this silver Canadian maple is yours. I'll reach out to you and figure out how to get this to you. So thank you all for commenting and being active on the videos there. More importantly, let's get into the markets. Okay, so the story that we've been talking about for the last few weeks here on my channel are we've had 1 month, 4 consecutive weeks in the red. We had this huge candle on the second week, and in week 3, we chopped. We didn't either go above it or below it. We just kind of chopped sideways for that week. The market finally took a direction, and we definitively closed below that giant red candle and came all the way down on the weekly chart here for the S&P 500, and we touched the 20-day moving average. What this looks like on a daily chart is that we actually had broken the 50-day moving average, and we were sitting in between the 50 and the 200-day moving average. So first note here, things could get worse. I am not going to sit here and preach and say that things are going to get better. Things could get worse. We could continue to see this come down into the 200-day moving average or the 50-day moving average on the weekly chart. So I don't want to just come out here and preach that we're in the clear. But huge news this week. So this is the president of the New York Fed. He's a permanent FOMC member, which means that he votes on whether or not we cut interest rates in the December 10th meeting coming up here in a few weeks. So what had happened in the last couple of weeks, especially if you followed along, I'm on the cmegroup.com. You can see the percent likelihood that we are going to cut interest rates on December 10th. This was at 80% about 4 weeks ago. It dropped down to 70, 60, 40. We had an episode where it was sitting in the 20s. It was at 20-something percent. And so the market was almost positive that we were not going to see a rate cut. This was prior to NVIDIA earnings. This was prior to the non-farm payroll report that was published on Thursday. And since then, this guy right here, John Williams, came out. Long story short, he basically said he sees room for near-term rate cuts, which is dovish. The difference between what dovish and hawkish mean. So when we're talking dovish in terms of the Fed, that means that they are prioritizing economic growth, which means they are lowering interest rates, making money more accessible. When we say hawkish, that means they are taking a stance where they're emphasizing inflation control and stability, and so either keeping rates the same or raising interest rates. So him being dovish means that it's more likely, not more likely, it means that the pendulum is swinging in the direction of the Fed possibly cutting rates. So this was at 29% a couple days ago, and it shot back up to 69%, which means the market now believes there's about a 70% chance we're going to cut interest rates. This is positive for the markets. You know, I think this comes from a combination of things, the NFP report, as well as with the government shutdown that happened through October and some of November. They're now basically forecasting that GDP is going to be lower, and they're already expecting that, you know, there could be some financial struggles, I guess, with the entire country and not having as much money injected in because a lot of the folks weren't getting paid during that time. And so this could be the Fed's way of getting ahead of that and cutting interest rates, and among a number of other things. Long story short, the market now has a feeling or a hunch, and this is going to start to get priced into stocks this next week, that we're going to be cutting rates on December 10th. So what does this actually mean for the markets and for our trades? Again, we are not in the clear yet. We could still go down. I'm not a financial advisor. This is not financial advice. All results may vary. I'm saying we could still go down. That being said, with the pendulum swinging now, and the Fed and the president of the New York Fed, or the chair, saying that we could see rates still come down in the near future, that is quite positive for the markets. Okay. And maybe just to give you like a bit of transparency about how this actually works, on December 10th, there's 12 voting members in the Fed. All 12 of them get together for about a 1.5 to 2 day meeting where they chat about everything in the economy. They chat about inflation data. They chat about labor market data, GDP growth, financial conditions, global risk, and so on. And they all sit there and brainstorm. Then every single one of them goes up and they say their pitch on what they think is going to happen with the overall economy. And then Jerome Powell, basically the head of the Fed, is going to go up and make his decision on whether or not we're going to raise or lower rates. So there's a chance we could see lower rates. That's going to be huge for the markets here. So how am I trading into this? And a trade we covered on my last episode. If you haven't seen it, go check it out. It's about PayPal. That's my newest order right here. So I pulled this order on Friday. I got in at $60.15 was my buy. And then currently it's worth $60.99. So I actually caught a little bit of upside just on Friday here. If you want to go see that video, I talk through why I think PayPal is going to go up, the news around PayPal, the financials. We go into the financial statements, and I give a bunch of reasons on why I'm investing in PayPal. How I'm going to trade this week. How I think intelligent investors could trade this week. Again, not financial advice. I'm not a financial advisor. Is that you need to find companies that are very, very strong. The financials are bulletproof. We've talked about some of these. One of them, PayPal. The second one, Duolingo. I think Celsius is up there as well. So a couple of these stocks where the financials are just very strong. Now, because the market has been so bad, let's open up, like, for example, Duolingo here. They took a big hit. If you watched my video a couple weeks ago or a week and a half ago, they've been kind of trickling down. The whole market's been down for the whole month. A lot of these stocks have been beat up, and then they get beat up again by just simply market conditions, the macro conditions. Same with PayPal. We'll open it up. Had amazing earnings up here. The earnings were insane. The financials are insane. The whole market's been down for a month. PayPal goes with it. Doesn't mean it's a bad stock. It means that the market has more momentum than a single stock can have. Now, if we do see a turnaround in stocks here, what we can do is we can buy in and hold these stocks knowing that they have very, very strong financials. If, and it's very possible, we continue to see a downturn here, that's okay. We can dollar cost average into these stocks. We already know these stocks have been beaten up over the last month. So if PayPal is going to drop even further, we can put some of our money into it. You throw 10% in now, 10% in on Wednesday, 10% in a couple of weeks, and so on. And you can dollar cost average in, and that way you don't get burned if it does plummet and if the market drags it down with it. But you also will capture a lot of the upside too if this thing does turn around. So that's my recommendation. That's what I'm doing. That's what I'm doing with my PayPal position here. I'm going to continue adding to this through the week and the weeks. It doesn't really matter to me how low this thing goes. I know that this thing's already so cheap on the price to book ratio. We chatted about that in my last episode. So I truly believe there's just a lot of upside here with this position. I think that the market is actually truly undervalued at this point. So dollar cost average in on really strong stocks with good fundamentals. You don't have to be a hero. You don't have to make these huge plays, but just be smart about it. The market could go down. There's now a lot of reason, and there are some good news coming out with Williams' comments here on the possible short-term rate cuts. The market's already pricing this in. I'm assuming, again, I would assume, who knows, the market's going to do what the market wants to do, that we could see a bit of a rally this week with this news coming into that Fed meeting. If the Fed does cut rates on the 10th, we could see this rally continue into December, the Christmas season, January, and so on. So we may have just seen the bottom, this little correction, and we could carry on. We could go down, find good stocks, dollar cost average in. Huge congrats to Strong Akil 1 on the silver. And then I will keep you updated on my positions in PayPal here, as well as if you followed along my episode with the D-Wave, the Qubits Strangle. I sold my put at profit. So I bought it for 124. I sold it at 250. So I made just over 100% profit on the put, but I'm still holding the call. So right now, even if the call expires worthless this Friday, I've made $2. Now, if we do see a rally in the week, because of this Fed news and the dovish stance, I'm now whatever I can make on this on the option call up here. That's all just going to be gravy. So I hope we see a bit of a pump in the next day or two. I'm going to sell that out, maybe make 80 to 100 bucks, and then you can see on that trade. I'll see what I close out percentage wise, but I'm assuming I'm going to close out percentage wise somewhere above 50% on that trade, and I held that for a week. Anyways, I appreciate you all. I'm going to be starting a new series. I've been building it out here for a while. It's going to take a bit of work because I really want it to be done well. But we've been talking about swing trading a lot, and I'm going to continue, weekly walking through my picks and what I'm seeing in the market. That being said, I really want to start talking about my private long-term investing portfolio and my methodology around that, how I've been done well in the past, and especially in times like this where we see these little dips, what we can be doing to position ourselves even stronger in our long-term portfolios, how we can be dollar cost averaging in on times like these. So really appreciate you all. That video will be coming out in the next week or so. This week will be mostly about updates, and I'm sure we're going to see again a lot of volatility in the market like we've been seeing, but I'll keep you posted and I'll continue showing you my stock picks here. Really appreciate you all. Thanks so much. Cheers.